that about 5% growth target has been a bit more challenged given the economic slump in China. So what are we expecting policymakers to do?
Well, obviously, as we head through October, that about 5% growth target is in severe jeopardy, given the property sector woes, the fairly weak, of course, consumer spending, and overall that is all contributing to a deflationary environment in China. So hitting that goal is going to be tough without going back to that old cocktail that China oftentimes uses in downturns, and that is selling bonds essentially to funnel into infrastructure projects. And sources are saying that is what the Beijing leadership is considering right now. It might not be the so-called big bazooka stimulus. We're talking about 1 trillion yuan of new bonds, sovereign debt for spending on infrastructure. It's 137 billion US dollars. Considered by most economists to be fairly modest, but again, I think it would be more important, as we saw on the Golden Dragon Index overnight in New York, it would be a positive message coming out of Beijing as we go into the fourth quarter with so much uncertainty on that growth target. Now, that would raise this year's budget deficit to well above the 3% cap set by the National People's Congress back in March, and would also essentially mark a significant shift in the narrative coming out of Beijing, which is so far avoided broader stimulus. They've kind of done a piecemeal approach, especially with the property sector, and it would excuse me, they have this rising deflationary environment, the property downturn. But at the same time, we are hearing that the IMF, in its latest World Economic Outlook, says China needs forceful action, its words, to contain its property problems. Beijing should help restructure struggling developers to make sure that there isn't any increase in financial instability and that it does not spread to other parts of the economy.